Hey, traders. Oh, that's a lot of Raghee. Hang on. Let's fix this. Good morning, everybody. Hope everyone's doing well. Good to see everyone. All right, so let's get to it. Twas the night before Powell, and Raghee is bullish. That's pretty much the show, and I'll see you all tomorrow. I'm just kidding. That's the story, gang. I am still going to be looking at the long side of the market, and got a lot of questions about Tesla. So I thought I'd get a little bit of some of the questions out of the way for the ones that I know I got via email. So let's get into that. But a lot of folks have asked me what it is that I'm doing with Tesla, and the truth of the matter is nothing. Up until this point, there have been buy the dip opportunities, right? I mean, forget the 3-for-1. What is the underlying market structure that this event is happening within? Same thing with Jackson Hole. What is the underlying environment that this event, this hot zone, is happening in? Same thing with earnings, right? What is the underlying market? What is the structure? What is the trend that this event is happening within? So you have a hot zone, a massive one. Would I want to short this? Not until retail traders and investors get to have their 3-for-1 split buy. Remember that after the split, and I know there's two ways a lot of folks are going to look at Tesla, and I probably have a dozen emails and social media hits on people asking, what are you doing at Tesla? There's going to be a lot of interest in, well, once it pops up, 303, not even a big move, frankly. Actually, you know what? Let me tell you for sure, because this is based on the 300 pricing. And I know a lot of you know volume and volatility, two factors that most traders are unaware of, right? So let's talk about Tesla here for a moment. What is the typical price movement range for Tesla? Let's see. That can't be right. That looks a little too high. But I'm looking at about, what, 5.5, 6 points? Is it that few? No, it's got to be more than that. 40, 35, 40. Anyway, I'm trying to pull it up real quick. Anyway, the typical price movement range is what I would expect this market to rally by. It doesn't even look like we're close to that right now. But after the bell, we'll probably see a surge. There is going to be a huge temptation to short into that. Be very careful, because while the next move after the initial 3-for-1 split is likely going to be a big move higher, big based on what? Right now, it's not looking very big, but it should be a move higher. Subsequent to any split, this is not just Tesla, subsequent to any split, expect about a 10% pullback. Well, if that 10% pullback still leaves us above the 200 exponential, I use the propulsion dots and the wave, and we still have a bullish momentum, bullish trend, underlying psychology, underlying market structure, let the other folks pick the top. I'll continue to look to ride Tesla to the upside. That is my plan. So thanks to everyone who asked me questions about Tesla. If there is a minor high, if we happen to reach the Darvis resistance levels, right, I get a minor high signal, that's a completely different conversation. It's not a short that I would like, but it is at least one that we can manage risk from. I can keep a very nice, probably at minimum, 2-to-1 or 3-to-1 reward to risk ratio on that, right? So keep that in mind. If you can't have a favorable risk to reward ratio, remember, gang, if let's say you're using a 3-to-1 risk to reward, but you have a high win rate. That sounds great. Okay, you win, you win, you win. One loss takes away 3 winners. 2 losses in a row takes away 6 winners. So think about that when you're using upside down win reward ratios. I see them out there all the time. And while it is something that can work for a short period of time, remember, when the drawdown period comes, and they will, remember that you're now losing at 2 to 3 times what you were gaining. And this is why I talk about risk reward when it comes to trying to pick that top. You got to have that favorable risk reward. All right, so that's Tesla. Okay, I probably got more questions on that than any other. So let's go ahead and dive into the questions. I don't need to tell you all that we have preliminary GDP, which I will tell you this, probably not much of a reaction to something like this. It's a little bit better than expected, so expect equities to come down a little bit. We're still in the rabbit hole of, good data is bad for stocks. Remember that we did have the Atlanta GDP yesterday, and I look at that Atlanta GDP now that preempted this preliminary GDP as probably already setting the scene for, okay, yes, we're expecting a little bit weaker a GDP, so not as likely a big reaction to this. And that's where we sit. All right, so let's jump into the questions. As always, all right, Sam, thanks for all that I give. It's my pleasure and frankly, my job. I appreciate that, though. It is appreciated more than you know. I appreciate you all showing up. Otherwise, I'd be talking to myself, which will tell you, not a lot of fun. What is a minor low, and is there a minor low? So minor lows are just a 3-candle pattern where you have a lower low surrounded by 2 higher lows. So it could be a 5-minute chart. It could be a daily chart. Is there a minor low on the S&P? Yes. Have we taken out that minor low and completed the pattern? Also, yes. That happened as we traded higher through essentially 41.15, 8 3/4. So yes, that's is there such a thing as a major low? Not that I know of. Not that I know of. Minor lows are just old pattern that I learned probably in my teens, and it was just, I don't know if it goes by another name, but that's the way I was taught. It's a lower low surrounded by 2 higher lows. So I don't know if there's a major low, not that I've ever heard of, but thanks for the question. And yes, we have it on the S&P. And we've been talking about buy the dip. I dedicated a whole video to that or two last week. This is an uptrend and we're pulling back. Gang, I think a lot of folks ask, well, Rag, what about patterns we've seen in 2008, right? Most recently. Gang, 2008 is nothing like what we have right now. And for those of you that actually were invested or traded through 2008, I'm not telling you anything you don't know. The folks who didn't don't know any better. It's just blips on a chart, right? They don't know that this was a global economy on the brink of collapse. Gang, we were moments from ATM cards going into the machine, right? And not getting spit back out. That's the insanity of 08. That's not where we are right now. That's really not where we are right now. So a lot of folks are asking me, Rag, is this like 2008? No, it's nothing like 2008. It's really not. It's not even like 2001. So this is a very, I have to say, very organized, people, we're seeing this market adapting to monetary policy shift. That's it. Yes, inflation's very high. But this is really a pretty organized adapting. And I'm the first one to make fun of the FOMC chuckleheads. They have done an exceptional job being very clear and quite consistent about the monetary policy shift. So I really can't say that they've done a poor job with this. Now, we can talk about how we got there, but gang, every single bubble was in some way inflated initially by extended periods of very accommodative monetary policy. So this is really no different. Home Depot. Thanks for the question, editor. Do I like Home Depot? We've been looking at XHB and ITB. And if you crack open, well, let's do this. So I don't want to look at Home Depot through sort of the lens of the Dow. Of course, it's heavily weighted there. We could look at Home Depot through the lens of consumer discretionary, XLY. We could look at Home Depot through the lens of XHB or ITB. So it depends on what it is. So the way I look at this, whenever I look at an individual stock, I ask myself, well, is this a proxy for a larger narrative, larger meaning index or larger meaning sector? When I look at Home Depot, the double green that we see here, it is a relative outperformer. There's no question about that. So if you're looking to buy the dip in a corner of the market that reflects the Dow, XHB or XLY. Now, those are three very different looks at index sector stock. There are three different looks at a top-down analysis that gets us to Home Depot. If you can pick one of those sectors and Home Depot is the outperformer, you're right as rain. All right. Next up, hey there, student. What kind of screener settings do I use to find each trading opportunity among the ocean of stocks out there? You're looking at it, student. I don't use scanners or screeners. If I do have a large list of stocks that I've extracted from, say, the simpler scanner, I'm going to run it through a series of filters on, say, FinViz. I copy and paste that list. I plug it into FinViz with some specific requirements around technicals, volume. But for the most part, it's index sector stock. I know what stocks and sectors are in the indices. I know what stocks are in the sector ETFs, and it's a relative performance scan that I do in a very old school, look at the charts relative to each other kind of way. So I'm old school in that regard, student. And maybe that's partly, because, well, when I first started trading, my charts were mailed to me. This was pre-internet. This was real-time feed. My first real-time feed was a DTN dish, the way we have the DirecTV. It's a DTN. Some of you might remember that company. DTN dish. I think I paid something north of $1,400 or $1,600 a month to get delayed data fed to my office at the time. Because of that, I have a very old school way of looking at, I want to look at the charts, and I still do that over the weekend. So thank you for the question. All right, next up. Hey there, Nick. When I want to trade gold, sure. What do I use? What symbols? GC is going to be the touchstone. Nick, I've been a futures trader the longest. That's my I love that market. It's where I cut my teeth as a trader. GC. For new futures traders, I would highly recommend, hey, look, you've got the advantage of saying, I want to go look at the MGC. I want to take a look at the micro gold. We also have the luxury of being able to look at GLD. And if I get enough clarity at the GC, MGC, or GLD level, GC is going to be the decision-making time frame. Decision-making symbol. Daily is usually going to be my time frame unless I'm day trading, in which case it's a 5. If I get enough clarity in the underlying commodity, then we can think about going to GDX and all the XME different mining metals ETFs. But first, I've got to get a grip on the underlying commodity. Same thing, by the way, goes for oil and oil stocks, or natural gas and natty gas stocks. So I'm usually going to be GC personally. And then if I want to go options, I'll go options on GLD. It's more liquid, a lot of really good choices in terms of expiration. All right, what are my thoughts on GLD and QQQ? So if I am looking at GLD and QQQ as ultimately the way that I'll express my idea in the market, Stephen, I'm going to start off with GC and I'm going to start off with NQ. I really can't say that I love what I see on GC, although we do have a minor low and then it has moved higher. I don't see a great edge on gold. I just don't. So we've been looking at day trading gold, but not end of day. And of the indices, if you caught my video last Thursday, I do not really want to do much with tech. I have a couple outperformers that we're looking at in the Sector Secrets Mastery, but I really don't want to be focused on NQ. I far prefer, for a number of technical reasons, volume reasons. Check out that video from Tuesday or Thursday of last week. And I talked about why ES and YM are really much more preferable. That's going to put SPY and DIA at the top of my list. Not so much QQQ, Stephen. But I am looking at XLY, which is a corner of the QQQ. So we can look for relative outperformance within an index by looking at the sector. That's a big part of what we've been doing right now, preparing for what I would like to see as a bounce, a continuation of the trend that we have in the Sector Secrets Mastery. Thank you for the question. Hey there, Martha. When I have a setup for swing trade, do I ever wait until after the hot zone and then put on the trade? Yeah, actually, Martha, I sent out a number of alerts yesterday. And one of them was for traders who either have smaller accounts or lower risk tolerance, one of the better ways to trade into Friday would be wait for the volatility of Friday and look for opportunities to fade the trend corrections, the regressions to the mean in those what we call double green uptrends using the volatility of Powell. Otherwise, the trades that we have open right now, and I think we have 3 or 4 trades open right now, I would love to see maybe a T1 hit, the opportunity to get back to a break even, or we'll just wait. So I don't always, it depends on how comfortable I am with the risk reward, how comfortable I am with the time from when I get in to that hot zone. So great question. Flat is always a position. Waiting for the volatility of the event and using that volatility is probably the more conservative way to go at trading something like tomorrow's Jackson Hole. All right. Okay, so next up is Ken says, new to the futures. Cool. From your experience, is scalping a recommended day trading strategy? Ken, I think that, whenever we get, and I keep this on my desk all the time. It's one of the many sticky notes I love, and I don't know if you can read that. It might be a little difficult to read, but it says, wisdom begins with a definition of terms. I don't know that I can find a definition across 10 traders who agree what scalping is. So consequently, that word for me doesn't have a really strong definition. It's usually a very aggressive, very quick momentum strategy. Is it complicated? No, but you need to be very, very, very strong on your order entry. In other words, order entry's got to be something that's second nature. You've got to be able to put those orders in, modify them, cancel them, get in, get out with absolute ease and speed. For that reason alone, I say scalping is not a good place to start for a new trader unless they're very good on their order entry. But I find order entry needs experience. It needs some time behind that platform. So as far as a new trader goes, no. And as far as a strategy that I use, no, I'm not a fan of scalping. I'm a fan of end of day or intraday trends. I'm a fan of fading exhaustion levels, whether they be volume or volatility. So then there's my bias, right? Which is I don't really like to scalp, but I see a lot of new traders think scalping's the way to go. And they get annihilated, not because scalping is not a useful strategy, but because they underestimate how fast the order entry and the ability to recognize the opportunity must be. It's quick paced. So it's not that it doesn't work. I just think it's more for experienced traders. All right, next up. Good morning. Good afternoon. Yes, good afternoon. 2:00, right? In the UK. What am I thinking about Bank of America and Freeport-McMoRan? So Bank of America I like. It's one of the individual stocks within the XLF that when you crack open the XLF and you look for relative performance, you can see that Bank of America is one of the double green uptrends. There's quite a few of them. Bank of America, Wells, Schwab, those three have been on my list. So I do like it for a potential buy the dip, but I would just as soon go with the XLF if at all possible, which is really a very similar trade. Next is Freeport-McMoRan. So Freeport-McMoRan is oftentimes very much a proxy for copper. If copper looks like a buy to me and Freeport-McMoRan is not 2 weeks to earnings, I will consider that as a potential entry. So again, if copper looks good, Freeport-McMoRan should look a lot like copper, most often does. And as long as Freeport-McMoRan is not 2 weeks to earnings, I'm okay using Freeport-McMoRan as a proxy in many ways to copper, because for a lot of traders, they won't trade copper, initial margin requirement, or they're uncomfortable with futures. Totally fine. Freeport-McMoRan, for me, is most often the proxy. And then once you start looking at Freeport-McMoRan, remember, crack open the SLX ETF, crack open XME. These are really cool corners of the market to look at within metals and mining. All right, gang. As always, thank you so much for being here for Charts and Coffee. I appreciate the time. Love the questions. I know we don't always have time to get through all of them, but I'm here Monday through Friday, 9 to 9:20 for our simpler pre-game show. Sunday evening, 6 p.m., We have the weekly Raghee report. We get ready for the week. And of course, take your questions. Thanks as always. Be good to each other. See you tomorrow.